Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analyzing the S&P 500 followed by the Nasdaq100 and the DowJones30 futures charts on this final trading session of this brutal week for the US indices. I think just as the equity market as a whole, it has been a horrible week with immense selling pressure. To kick off this month of August, we're now 3 weeks in now, and we find ourselves trading down 6%, which is a lot worse than what I did initially anticipate. I did, coming into this month, I did identify the fact that, from a seasonal perspective, August is not a very strong month, and I was anticipating anywhere between a 2.5 to a 5% decline. But we've now gone beyond that 5% mark. And in all honesty, team, it looks likely that we could fall, a little bit further before things start to get better. Of course, next week we have Jackson Hole Stock Summit, where we are expected to hear from Jerome Powell. This is a summit that investors are heavily dependent on in order to, kind of gauge a sense of sentiment from the Fed. Of course, last year during the Jackson Hole Summit, Jerome Powell kind of had a mic drop moment where he come out and probably sounded the most hawkish he'd ever sounded before. And you had the S&P 500 that fell more than 1,000 points over the next month after that summit. So, of course, we are going to be looking at that Jackson Hole Summit to see what Jerome Powell has to say about the overall market. But, the market is selling off significantly here. And this is partially due to the fact we have the 10-year bond yield here rising to last year's highs, which was a high set back in October 2022, which is at around 4.3%. And the problem is that there's some investors that fear that this could potentially go up towards 4.5%, which is roughly this area here. And that could potentially add to the selling pressure in the stock market. As well as that, we've also had to digest a rising US dollar. Of course, the higher the US dollar is, the worse it is for US equities due to export FX fees, etc. A great example like that is a stock like Microsoft. When the dollar's high, Microsoft typically trades lower because most of its business is done in Europe and Asia, and that's evident here. We're seeing some immense selling pressure in stocks like Microsoft, which of course have a massive weightage in the broader US indices. So the US dollar's kind of trading in this minor downtrend. I hope and I expect it to eventually break down further. But before I get into more depth into the indices, I just want to quickly draw your attention to one indicator that I'm really paying close attention to moving forward, especially into the next couple of weeks. And I'm going to look for it to tell me when the potential bottom has occurred here for the month of August. And that is the DeMark indicator. If you are new to DeMark, it's very simple. When it forms a 9 or a 13, these are typically sell or buy setups. So obviously, when the market's in an uptrend, when a 9 occurs, it could potentially offer a change in direction towards the downside. In this case, that wasn't to be the case. But 13, I did say on YouTube a few weeks ago that a 13 sell setup had occurred here. And this is when I was selling the market going into the beginning of August, and I made some money. But unfortunately, I closed those sales a little bit too early. And, kind of looking at my mistakes that I've made going into this trading week, that was probably the main one that I did make. I sold my shorts around here way too early. And, of course, we did have a 9 perfected buy setup here where we had 9 consecutive closes lower than 4 days prior, and that set up this 9 perfected buy signal. But it didn't really make the market move at all, and the market has continued to fall rapidly, and we are now in the cusp of forming a 13 setup, which is of course the creme de la creme. But unfortunately, we only have a 7 countdown at this moment in time, so we would need a 6 further counts to form the 13. And once you get past a 9, it is a consecutive closes lower than 2 days prior rather than 4, which is for the 9 setup. So, I could go into, how to use the DeMark indicator into more depth, but I think we'll be here for a very long time. But just to wrap it up, I'm waiting for a 13 to occur here for the S&P 500. We currently have a 7, which means that we'd have to have a 6 further trading sessions or consecutive lower closes than 2 days prior. So, just looking at the calendar, where does that take us? Well, 6 trading days. If the market was to trade lower for the next 6 days, you're looking at the 28th/29th of August for a potential low, which makes a lot of sense because on the 24th and the 25th next week we have Jackson Hole. So I think a low is probably more likely to occur after a Jackson Hole meeting once we've had some clarity from Jerome Powell. Of course, another catalyst that could potentially cause some upside bias in the stock market next week is Nvidia's earnings, which is on Wednesday evening. We saw it last quarter when Nvidia reported its earnings and had this blockbuster 30% rise in its stock price as the CEO Jensen Young come out and basically forecasted a 50% growth in predicted revenue. That of course sparked stocks like AMD, stocks like Microsoft to surge significantly as well, and they all gapped up high, and it had a massive influence on the broad stock market. So I think that of course is going to be very interesting to kind of monitor Nvidia's earnings as we go into next week as a potential bullish catalyst. But DeMark indicators kind of telling me we're probably still another week off, and we could potentially see some further lows occur here. Just drawing a fib chart from the October lows, we're currently testing at 0.236 fib area, but if we were to break down here, then I think the next low or the next area of major support here for the S&P 500 sits at around 4,200, which is the 200-day EMA. I think 4,300, due to the fact it's a large round psychological figure, would also offer some support. So S&P 500 could still be looking at a further decline here of approximately 1 to 2% at least until we do find that bottom. Then moving over to the Nasdaq100, I drew up these this downward trend line that we've been trading in for the past week or so, and we've now broken below it. I've had to tell my signal team to close all of our positions because this market does look like it wants to go lower. I think 14,400 could be the next target here, which represents a 0.618 fib area. That'd make a lot of sense. That's the peak to trough from 2022 bear market. So I think that is an area which could form some sort of support. Also, if we were to do a fib from the lows to the highs of this year, we're currently testing at 0.236 fib area, just like over in the S&P 500. But if we were to break down lower here, that could potentially take us all the way down to 13,800. But again, I don't think that we do get that low. I think that a low is more likely to form within the next 1 to 2 weeks rather than us trading all the way back down to 13,700. And then looking at the DowJones30 team, Dow Jones has clearly broken a major area of support, which is its 50-day EMA. We're now trading back below the neckline of this inverted head and shoulders pattern that we found ourselves trading in for the past couple of months. And this chart doesn't look pretty. Next area of support lies all the way down at 33,802. RSIs are not quite yet at oversold territory for all three major indices, which leads me to believe that we may still have some further selling to go before things start to turn around and get better. But going into next week, it's all about Jackson Hole. It's all about Nvidia's earnings, which could potentially offer a short-term bottom here for the markets. But yeah, be very careful out there, guys. I still believe that this market has a little bit further to go towards the downside. But have a lovely weekend, and I look forward to seeing you all next week. Don't forget, if you'd like to join my free trading signal group, you get free access for 1 month. Make sure you scan this QR code on your screen. It will take you to my website where you can sign up. It takes 10 seconds to get involved, and as well as receiving my trading signals, you will also receive my daily market research that I post there every single morning prior to the US markets opening, where I help you navigate through these very volatile markets.